Good morning, ladies and gentlemen. It is 9:21 a.m., May 2nd, 2023. We're in May. We are in May, everybody. Hello, hello. Welcome back to another Market Open. It feels like it's been a while since I did this, but it's only been a day since yesterday we did the Sofi earnings live, and that was interesting. So it's only been since last Friday. Happy to be back. Hope everyone's doing well. Sofi earnings were good. Honestly, they were pretty phenomenal, but the market didn't like it. They reported the day that FRC got seized by JP Morgan. That was crazy. Nvidia skyrocketed yesterday. The head of Google left. We got Uber earnings today. So much news to talk about. So much is affecting the market. So we got to get into it on another edition of the Market Open. It is the 5th month of 2023. Time is passing. There are 12 months in a year. So by next month, June, we will be 50% done with 2023 on our way to 2024. It's just insane. Time is moving pretty quick. Midwest Cannabis, what's up? Aha, Justin Bryant, Philip Rizzo, Hindenburg just went after Carl Icahn. I saw that. That's a very interesting thing because they were wrong about Square. So it's interesting they're going after the top guy now, which is Carl Icahn. Ebot, what's up? George Manson's, Mark LeBlanc, Pang Yotan, Geis, Stephen Waller, Paul, Phillip, Hauling America. Yo, what up? Bought 20 shares of SoFi just to get to 1,000. Not bad, man. I mean, these prices are not horrible. Joseph, what's up? Stephen, Walter, what is your feeling concerning with the upcoming Palantir earnings? I think that it's going to be, we'll do a podcast on this on Friday. I think they could potentially become gap profitable, and the street could, give it like a $9 price, but then it'll get eaten up pretty easily. I do think they're going to beat on revenue. It's just a question about what cost, right? Are they going to increase clientele and beat on revenue, or are they not going to beat on revenue but increase clientele, and therefore the sales and marketing expense will exceed the increase in revenue as a result of just getting more clients for the to show the growth of to show the growth of clients, but not to show the growth of revenue. Like if we get more clients, but revenue doesn't catch up with that because we worked hard to get the clients, but didn't match with the revenue, that's bad. I'd rather us have less clients in terms of year-over-year growth and have more revenue. If we can beat on revenue and somehow get to gap profitability, that would be amazing. So there's a lot to stuff to see in terms of what's going to go on with Palantir earnings, but it's going to be exciting, and we'll definitely go through it as well. All right, let's open up the market. A bunch of things to talk about. I guess first thing we can go over a little bit is just SoFi. I know there's been a ton of analysis about it already, but the big thing is they beat EPS by 30%, increased deposits by, they're at 526 pre-market. They got absolutely slaughtered yesterday. They were at 650 as soon as the market opened, down another 3.84%. So they're down 15% for the day, for the 2 days. They increased deposits by 2.7 billion. They exceeded member growth at 46% year over year at 433,000 members. Like they triple beat everywhere where they needed to beat. The problem is their loan originations, I think at this time has the market in a pretty scared space, because if FRC, which is a regional bank, SoFi is not a same regional bank, right? It's like a neo-digital bank, and it's incredibly popular, and it's growing in terms of the Gen Z demographic, and we can see that clearly with deposits. If they are not sort of the traditional regional bank, but traditional regional banks are being seized, there's going to be, shock in the system. Not to mention it's May, there's traditionally a sell-off in May. I think yesterday was kind of just not the right day for them to report. Unfortunately, they didn't know that, one of the biggest banks in the country was going to be seized and basically, overtaken. It just proved the bull case for the big banks even more. At the end of the day, SoFi is competing with JP Morgan and Bank of America. They're never going to fully beat them, but if you can get a little bit of market share from those guys, you're going to become a very big company. But even getting a little bit of market share is a very hard thing to do. And so, I think SoFi proved what they needed to prove. If they can just get to gap profitability by the end of this year, there's going to be momentum behind it. But this is one of those things where they've got to weather the storm. And as shareholders, I couldn't have expected a better quarter than what I got in this economic environment. It's like, just give them time, and I think they're gonna come out on top. I think Anthony Noto is definitely gonna file some forms with the SEC, if you know what I'm talking about, because he's got he's got some shares to buy. Let's just say that. He usually puts his money where his mouth is, so we'll see what's going on with there. Uber up 5.4% in the pre-market. Their earnings were decent. I am not comfortable buying this stock at what is the market cap now? Almost a $68 billion market cap. Not buying it. There's too many other opportunities in the market to buy it at 68 billion, but the earnings weren't too bad. They beat on revenue by 1.3%, beat EBITDA estimates by 12.5%. They beat GAAP earnings by negative 0.09% versus 0.1%. They beat EBITDA estimate by 22%. So, I mean, like they beat everywhere. The only thing they missed on is booking guides, which is how much they're estimated to be able to book. And so the market likes it, but I don't know if the market's going to be able to sustain this. Now, Apple, the big news on Apple, by the way, Apple just had a massive run up yesterday, which is insane in the context of SoFi. It's at $169. I haven't seen Apple at 170 in a long time. Is Apple got $1 billion in deposits in 4 days within opening up their Apple savings account. I've seen people literally say, hey, I was going to go to SoFi, but then I saw Apple do it, and it was so easy to sign up with Apple that therefore I signed up with Apple. I do not think Apple kills SoFi. I don't think Apple is the same type of consolidated fintech player that SoFi is. I think if Apple wants to try to kill SoFi, they definitely have the means to be able to do it. I just don't think they're necessarily interested in getting that deep into the mortgages, student loans, all type of stuff like that. I think they're like, hey, you have an Apple card, you can have an Apple savings account. It's pretty simple. And that's like super seamless, integrated right into the product, which makes sense. Now, nonetheless, that's bad for SoFi. And the reason that's bad for SoFi is because all those people that would have set up a checking and savings account with you and get 4.2% APY, now they're going to Apple. That's why SoFi had to increase their APY from 4.1 to 4.2 because Apple did 4.15 just to make it even a little bit more enticing. But it's not really that big of a difference when someone can take 3 minutes to get set up on Apple versus 4.1 or 4.2. It's like you'll give up that 0.1 just for the convenience of it. So it's not good for SoFi. Nonetheless, I don't think it necessarily kills SoFi, but it's definitely it's going to be tough. I mean, the next few quarters, we're going to see how much of an operator Anthony Noto is and if he can kind of get it from here. How long should I hold Palantir? Should I take profits if it 5x or more? Look, if Palantir 5x is within the next like couple months, yeah, I would take profits because that's 500% return in a couple months is pretty unheard of. But obviously, you know, I'm in it for the long term. My conviction is just way too deep on it, and because I believe in it long term. And now, if it 5x is in a month, I would sell as well, right? Because that's kind of ridiculous. But I will see how that goes. I would hold for the long term on Apple. You know, I mean, on Palantir, there's some of those companies that you just want to hold for a long time, and you have no regrets about opportunity costs or anything because you really would like those companies. That to me is Palantir. For other for other people, that's their Nvidia or Tesla or whatever it is, right? Good morning, daily bag holders. Good morning. Would you trade 100 shares of Palantir for 200 shares? No. Personally, no. I mean, again, I'm way more bullish on Palantir than SoFi. That's that's different. Views on Chegg. Yeah, we got to talk about that. This is interesting. Chegg, for those that don't know, if you ever went to college or like used this a while ago, Chegg is like a place where basically people cheat to find homework. I mean, they say they're an educational resource. There's just a place where people find answers for homework. ChatGPT and the proliferation of it has made it almost unnecessary to be able to use anything else to get answers to things. And now I went to school when ChatGPT didn't exist, so I used Chegg. I think I paid for Chegg as well because I just wanted to find answers really quickly. I didn't really care. But ChatGPT, I mean, if it gives you the answer, if you just plug in a math problem into it and it spits out an answer versus having to go do it on some website that maybe has the answer, maybe doesn't, you've got a really hard ask from a business model perspective. A 5x would make it an $80 billion company right now, which is absurd. I agree, which is why that's why you would sell. So there's a lot of things. We got to talk about IBM. We got to talk about a lot of different news headlines that are coming up right now in this market. And within all this madness, we've got the index up at $415, $414 pre-market because they're heavily weighted towards big tech. Big tech had great earnings. Amazon, I know it's down, but it had a phenomenal earnings and it'll be back. Tesla didn't have the worst earnings. Apple is going to have probably killer earnings. Well, we'll see about that. Microsoft, Google, Facebook, they all did their job. Now we'll see what Apple does, and Apple is 7.5% of the index. We'll see if it brings it down or it takes it to new heights. It is 9:30 a.m., May 2nd, 2023. Thank you so much for being here and spending your morning with me. You know the deal. The stock market is now open. Wake your ass up. The stock market is open. Apple hitting 170, $10 away from becoming a $3 trillion company at $180. Uber up 6.78% at $34. The market cap is now 69. It's teetering between 69.8 and 70 billion. I'm not buying that company at $70 billion. They are still not profitable. Let me repeat, Uber makes no profit and they're worth 70 billion. Is there a bull case to it? Yes. That type of bull case at this valuation is just a bit little ridiculous. GDC has been halted. This is another Chinese penny stock. We've seen a lot of Chinese penny stocks rise 1,000%. This one was up about 4x yesterday. and it's at $15.32. No wonder it's halted. It's probably going to come down. We'll see what goes on with GDC, but I don't know if some of you guys are in it, but I did see people talking about it a lot yesterday. 414 on the S&P, SoFi 424 down 4.48%. Let's see how low it goes. Look, if it goes under 5, I'm backing up the truck. And at this point, it seems like it could get there, but we will see how bad it goes. SQQQ at 29.18, up 4.6%, or sorry, up 0.43%. Amazon 101 down 0.72. Snapchat, horrible earnings. I mean, I found out how Evan Spiegel has control over the company, and the types of control he has is a bit ridiculous for a company that's not producing returns. Yeah, Snapchat, look, still a $13 billion company. You know, they're losing revenue quarter over quarter. Their age demographic can't pay for the ads they're doing. The content kind of sucks. There's no content discovery. You can't really build a following. There is nothing bullish about Snapchat outside of the fact that on the technicals or just pure fundamentals, it might be a little undervalued if they're able to show some growth to go from 8.55 to 12. But this was a stock that was at $80 at one point, and it just didn't make any sense, and it still doesn't make any sense. Spotify, I've done a lot of research on Spotify over the past couple of days, and I've heard the bull case, heard the bear case. It's an interesting one. I'm leaning more towards the bear case because I don't know if those gross margins can ever increase. And a lot of their users are coming from Africa and India that are just not profitable. So you cannot blitz scale and show these many users and not make, at some point, the unit economics catches up to the user growth. And that's just not right there right now. NVIDIA 287 continuing to rally. We'll talk about them in a second. Netflix 325. What else do we have? NEO 769, NASDAQ 12,199. Surprised? Yeah, the NASDAQ's still up above 12,000. ARC Innovation 35, SLG 34. Let's go to Palantir. I didn't even check these guys out. Where are we at? 781. And we got earnings in about 11 days on Palantir. And so we'll see what happens there. Did you pick up some more Amazon on the dip? Not yet. I mean, I think we could get below 100. So that's when I'll get a little bit more Amazon. But let's see. I'm not super eager to buy them yet. I will buy the dip, just waiting till when they do this. Good morning, Amit. You promised Kelly would join last night, but didn't see her as a guest. No, I promised she would join on Thursday, and that's still up in the air because she's very shy. So I kind of said she would join, hoping I would force her to join, and I'm still trying to force her to join, but I don't know if she'll actually join. So we will see. Is IEP Hindenburg short in the discussion this morning? Yes, let's get to that right now. So Hindenburg Research, the famous firm that is popular for shorting companies, has just put out a new report. I didn't even get a full chance to read the Twitter thread, so we'll do it live right now, in which I believe they are shorting a new company, and that new company is Icon Industries. Carl Icahn, for those that don't know, is an activist investor. He has basically, he goes into boards of companies and completely reworks them to be able to generate shareholder returns. Carl Icahn is actually the person that told Apple in 2013, hey, you guys are doing great. The product is flying off the shelves, Mac, iPhone, etc., but the stock's not going anywhere because you guys won't buy back any shares. And he was in a private dinner with Tim Cook, and Tim Cook says, so what do we need to do? And he said, buy back your freaking shares. And since then, Apple started spending $700-800 million a year buying back their shares, and Wall Street rewarded them heavily because they bought back the shares. So Apple is no stranger to how Carl Icahn can work within a company, manipulate a company, and ultimately get the company to do what he wants them to do. IEP is the ticker symbol. Let's see what Hindenburg has to say. Icon Enterprises is an $18 billion market cap holding company run by corporate raider and activist investor Carl Icahn, who along with his son Brett own approximately 85% of the company. We found IEP units to be inflated by 75%. IEP trades at a 218-cent premium to NAV, vastly higher than comps. We've uncovered clear evidence of inflated marks for IEP's less liquid assets. IEP has suffered additional losses year to date following its last disclosure. Remember, the company itself just owns stakes of other companies, right? That's their business model. Most closed-ended holding companies traded around a discount to their NAVs. By comparison, vehicles run by other star managers like Dan Loeb's, Bill Ackman's traded at discounts of 14% and 35% to NAV, respectively. We further compared IEP to all 526 U.S. closed-based funds in Bloomberg database. Icon Enterprises premium was higher than all of them. Okay, so he just goes on further and further. This is a long report. And at the end, I think they will, so they did a lot of research on this one. Overall, we think Icon, a legend of Wall Street, has made the classic mistake of taking on too much leverage in the face of sustained losses, a combination that rarely ends well. Interesting. So they are short Carl Icahn. Now, Carl Icahn, he's a character. He's not going to let them just go short. without having anything to say. So you can expect him on CNBC soon, probably defending himself. Remember, it's hard to trust Hindenburg because Square, which is their latest short, did not pan out. Right? Let me share my screen right here real quick, and we'll go to Square. Square is doing phenomenally well. I mean, even though they're down from like 70, yeah, they're at 59, but Hindenburg said they would go down 70%. They're not down 70%, right? They're down with the rest of the market, down 10%, 11%, but $35 billion market cap. Yes, they used to be at 45 a month ago, but $10 billion decrease in market cap is not a 70% decline. So, and their their earnings were actually really good. And I expect them to have really good earnings next time. And in fact, Square might be a little bit more attractive here at this price. We'll see how low they can go. But it's hard to trust Hindenburg when, the stocks they say are bad are not necessarily in a bad position. And the research they come up with is kind of just not strong. Ray, what's up? Thank you for being here. Good luck taking on Icon. Yeah, I mean, good luck. I mean, if you can't take on Jack Dorsey, you're not going to take on Icon. What's your updated portfolio looking like till? No, it's not Tesla. It was never old Tesla, Palantir. It's SLG, Amazon, Enphase, Palantir, Tesla, Sofi. Those are kind of the main stocks. Pete says, hey, Amit, happy to enjoy your content. Also, podcast with Vitaly, Chris, and Carlos. What's the dip for Tesla, you think? Well, Tesla's already had its dip, right? Elon Musk raised prices on vehicles in Shanghai. I think that's why the stock is up a little bit right now, 1.67%. The prices raised were $250 on Model Y and Model S in Shanghai. So really not a big increase in price, but it does show a little bit of the change in sentiment that they're actually increasing prices now, not decreasing prices. And that might be because demand is sustaining itself. There was a little bit of a, talk yesterday among the Tesla community that demand is decreasing in China because they're pausing production for the next for like a weekend in China. But that weekend historically is a Chinese holiday, which is why they're stopping production. But the counter argument was that over the past couple of years, they've never stopped production, even though there was this Chinese holiday. So the fact that they're stopping production means that they don't need to produce that many vehicles because demand is met, which means, if demand is sufficient, then there might be a little bit less they have to do, which signals that Gordon Johnson's argument about demand in China might be correct. And it also kind of makes sense given BYD has just a strong foothold in China. But the other argument was that they've historically always paused. So it's not like this is a unique thing that they're doing for the first time. Nonetheless, raising the prices in China is setting the stock up to 165. Look, we saw this go to 159 at the lowest. I don't know if we're going to hit 140s, 130s like people are saying. I think there's just too many buyers that exist at the 145 range, the 150 range, right? Even the 160 range, there's just buyers ready to buy Tesla, primarily retail. And so that community is very strong. It would take a really strong, I think, macro dip for this to happen. And when you got the S&P at 415, the S&P not even touching below $400, it might be harder to see Tesla come down. It might be hard, not just Tesla, a lot of the big cap tech stocks to come down when you've got the indices doing so well. Bullish investor. I always enjoy Finance Junkies. It's always on when I'm on the gym. Thanks so much, man. I appreciate it. It gives me good laughs. That's the goal. Gives you good laughs. Ryan says SoFi at 5. Oh boy. Wow. 509. There it is. Down 7.04%. Well, let's see. I mean, under 5 is where I wanted it back in December, but we never got it again. Let's see if it comes back there. Are you excited about Palantir earnings? Do you think there will be further slowdown? And if such, and will sell? Look, one of the things Chris said on Twitter the other day is like, for everyone worried that Palantir is going to go to like $5-6, it's already down dramatically, right? Like at some level, the stock is hit. And Palantir's been stuck in the $7.66, $8 range for a long time. Could it go below 6? Yes. And I would be one of the happiest people on the planet. Like you will not see a single tear in my eye if it goes below 6, because that to me is a generational opportunity. Market doesn't get it. Market gives it no respect. That's fine. I'm very happy scooping up those shares. I don't think it's going to get there because it's just, if they even meet expectations on revenue, remember they're also, I think they're generating some couple $100 million off the interest off the $2.6 billion they have in treasuries, or the $1.5 billion they have in treasuries. So that $2.6 billion they have in cash, a lot of people are like, why aren't they buying back their shares? Because their shares are probably not going to give them that much of a return as if just leaving it in treasuries, right? Short-term 3-month treasuries, and being able to somehow do some financial engineering to manipulate GAAP profitability. I think, remember, we got to remember this, just the optics of this. Karp says we're profitable last earnings, and he definitively says people can't say Palantir is not profitable anymore. Then the S&P 500 comes out about 3 weeks ago with this new referendum that even if your majority shares are founder class shares, F-class shares, as long as you maintain GAAP profitability for 4 quarters, you have a market cap of 12 billion, your company has most of its shares traded in the public, you are eligible for the S&P 500. This is a new change that didn't exist until decades ago because they used to have it, then they changed it, now they changed it back. Palantir puts out a letter saying that this is the thing, right? I promise you, I would never have even known this because I don't think there's any S&P 500 Twitter account that I follow that gives these news updates. So Palantir made all the shareholders aware of, hey, there's this new rule that's out there that says if you're profitable for 4 quarters, you get to be in the S&P. You're at least considered for the S&P 500. I don't think they would make that big of a deal out of it unless they were GAAP profitable. And if they don't become GAAP profitable, I really think it's one of the biggest strategic errors from them from a PR perspective to be able to make a big deal out of this new S&P 500 rule, knowing, right, a month ago, they know if they're GAAP profitable or not. And so a month ago, Carp definitely would have known if they're on track to be GAAP profitable when this S&P ruling came out. I think they pretty much knew, hey, we're going to be GAAP profitable. This S&P thing is out. Let's get investor sentiment high because we want investors to know that one of the things that will help the stock is getting into the biggest index in the world. The only way to get there is if we're GAAP profitable. And by the way, the rules show us that we can be GAAP profitable and be eligible. So that's the one thing where I'm just like, I just don't think there's any way they're not GAAP profitable in Q1. I think they're going to do some financial engineering, whether it's sell off something or do something else or get the interest from the bonds to be able to become GAAP profitable because there's just no way. I just think there's no way you brag about the S&P 500 allowing your company to be in, and then you don't become profitable. It's very weird. Like it would be such a strategic error from their side, just from a pure optics business perspective to do that. Like it makes zero sense to me. And I don't think Palantir is that dumb. I really don't. Now, granted, maybe they have an amazing quarter and there's some metrics that are so good that you can justify not being GAAP profitable because revenue growth or whatever, something. But if the quarter is that good, you would imagine that GAAP profitability is there to follow as long as things are going like SBC. I want to see SBC down another 5-6% this quarter. If we get that down this quarter and we can shed off some other costs here and there and we can grow a little bit more than what was expected, maybe there's some government deals we don't know about. Boom. I think we can get to GAAP profitability along with the fact that we have interest from these short-term treasuries. SoFi dropping because of pending Fed rate rise. Well, that might hurt the entire market tomorrow, right? So the Fed tomorrow is likely going to raise interest rates by 25 basis points. We might have another rate hike after that, and then we might get a little bit of a pause. The concerning thing about SoFi is they've projected that the Fed is going to cut rates 2 times by the end of this year. So they still have factored in that by December we will have 2 rate cuts. I don't know if that's going to happen. I'm not sure if that happens. And, I do think we get inflation down significantly by the end of this year. And if that is the case, then there's going to be a massive pivot from like August to December. Like all this, red we're seeing, this is going to change and we might end up being in a really nice spot, but it really depends on inflation. It depends on what the Fed is going to do. And if SoFi is wrong on that, there might be some more pain for the rest of the year, or it just might be flat for the rest of the year, right? That will be a little bit tough for SoFi. Amazon at 102. Now, let's talk about Google a little bit. The head researcher of AI at Google left Google yesterday because he wanted to be able to freely talk about the dangers of AI. And his argument is that he got a Nobel Prize for his work in AI. He sold his company to Google for $44 million. He's basically worked at the heart of the technologies that enable things like ChatGPT and LLMs to be successful and meaningful in today's environment. And he's saying he regrets, this guy's like 80 years old. He's saying he regrets his life work because he believes that what he has done is going to lead to such a proliferation of misinformation and fake content that people won't be able to distinguish what that is from truth. And this is actually really correct. I was reading an article yesterday about content farms that are popping up. This Bloomberg had a phenomenal piece on this. And Bloomberg basically said there's these articles that are popping up, these websites that are just generating thousands of AI articles. And they're spamming their websites with these articles. And they're just monetizing it with advertisements, right? With Google AdSense. And they're getting these cheap clicks. And they're lying about stuff. Like someone said Biden died the other day and all this, like random stuff just to get clicks. And that's going to happen times 10 in the video, audio, and written space, because when you've got the tool to be able to make the content and zero regulatory environment, and I don't think in America there can become a regulatory environment on this because we have freedom of the press. And when you have freedom of the press, you're not going to censor people from basically being able to produce the content, even if you don't allow it to get massive levels of distribution. If that's the case, there will be so much content in the context of AI that it will be undistinguishable from reality or truth. Which means, and this is kind of my bull case for my startup, Aldia.io, the platforms will have to dictate the curation. And Elon's been talking about this for a while. He was like, if we have so much content via AI, that's why verification matters, because you can't have 1,000 bots verify, right? They're not going to pay $8 a month. If you're a guy running a content farm of 50 websites with 1,000 articles each, you're not going to pay $400 a month, right? 50 times $8 to be able to verify all of it, because it's just not profitable. So verification actually determines the basis for how content is going to be discovered. A lot of that content also doesn't matter if it's not getting discovered, right? If you make a trillion new podcasts, but none of those podcasts have any discovery, they're just published on RSS feeds and they're dying, or you make a ton of new videos, but YouTube's not showing those videos to anybody, then the AI nature of the content doesn't matter. So the platforms, to me, determine the validity of the AI content actually reaching scale. But the fact that it can be produced at such a level is why the guy is leaving Google, because he's saying, hey, we need some regulations on being able to deal with this stuff. And that's crazy. Text barrier is nearly zero. I agree. I don't think it would happen 10x because the barrier to entry on text is much lower. So you think it would happen more than 10x? Because if the barrier to text is so low, right, then you just imagine it's gonna keep going. Palantir did buy 50 million in gold. Yeah, and I think they're up 11% on that 50 million in gold. So I forgot about that. Whenever they sell, that's a profit as well. And we'll see when that's happening and see where that goes. Those farms could be profitable as long as they make more on their content. Yes, that's true. And it's just, Google have a big spam filter, so they're starting to recognize these AI sites and not letting them monetize. So we will see. Much less than 10x. On video and audio, yes. On text, it would be a lot more. On video and audio, yes. 100%. Yeah. Now, video and audio is not that good yet, but when it gets that good, that's going to be where it goes crazy. This is something that was shared yesterday. It was showing... Let me just see if I can pull it up. It was showing a fully generated AI video, and it was just absolutely insane because it's like this is not going to go anywhere. This is going to get even more and more and more crazier. So this is the AI video right here. Let's play this right now. As you can see, it's like a Bud Light. It looks like a Bud Light, a beer commercial, and the people kind of look real, even though the fingers and all that stuff is messed up. This, in the next, I would say, couple months, this is going to get even more realistic. And so it brings into a question, you know what the economics of this is from a stock market perspective? It's like Facebook, Google, YouTube, etc. These sort of big tech names, they're going to benefit even more because they're just going to have unlimited amounts of content. The question is, are people going to want to see that content? So for example, on YouTube, if all of the video starts to become AI generated, like what is the moat of YouTube? The moat of YouTube is there's people that want to watch videos on the platform and there's an algorithm that shows them more videos. If the algorithm keeps showing AI generated content, the question becomes on the consumer. Is the consumer, are the people in the chat, right? Me, myself, I'm a big consumer of YouTube. Are we willing to watch AI generated content at the same level and with the same level of dedication as we are user generated content from people that are actual humans? If not, then the platforms aren't going to curate that content because they're going to recognize that this content is not going to be sustainable. If we are, which my guess is we are, because like what's distinguishable from reality, right? Then content creators like me are going to have a hard time being able to compete as well. Like and the platforms might benefit even more because they just have unlimited amounts of content. It's going to be the wild, wild west out here. This is the greatest shift we've seen in history outside of the internet, because now the internet democratized information. AI is democratizing content creation, right? Before you actually had to be good. You had to actually be good to be good on content. Now with AI, you can just train a model. And if that model is appealing to enough people, you can get attention. And what I've learned in the past couple of years is that everything on the internet is a gamble for attention. How much more attention can you get? And that's all that matters. Think Real Coffee for this morning. Keep up the great work, man. Thank you so much. Think Real. I appreciate it. They gave $20 yesterday as well for finance junkies. Those Tesla returns are paying off really well. Thank you so much. We got 300 people in the chat. Thank you. 300 people on the market open. I appreciate it. It means the world. Thank you for spending your morning with me. It means a lot. Enphase at 156. Are you buying? No, because I think Q2, and I was talking with Vitaly about this. Let me open up Webull, is also not going to be as good for Enphase because interest rates are going up, right? And if the whole reason Enphase sucked in Q1 is because interest rates were up, and that's why they said the American market, just did bad for them because people don't want to afford to finance solar. Interest rates are not going down, so I don't think we see a shift until Q3, Q4. Now, granted, we'll see how low this has to go. This is a stock that's going to get eaten up as well by a lot of people that have been waiting to buy this at low levels. But could we hit the 140, maybe 135? Yes. On the technicals, as Vitaly was talking about, 135 is definitely possible. So I'm not buying yet. In fact, I don't want to buy for a couple of weeks. I want to see what May gives us, right? I want to see a real. I have some cash ready. I want to see what happens in May. How, can Amazon get back to 95? Can we get that on Amazon? Right? Can Apple get back to 150? Can Tesla get to 150, 148-ish, 149? Can we actually get that low? Can Enphase get to 140? I don't know if we can get to these prices, but I do want to see a little bit more decline before I decide to start buying up a lot more. Palantir, right? Are we going to get to $6 on earnings? I don't know. I mean, again, if we get gap profitable, I don't think the street, if we get gap profitable, the street can't hurt us. Oh, there we go on SoFi. You're below 5. There we go. We got to tweet that. We got to tweet that. We got to tweet. We got to tweet. We got to tweet. Oh my goodness. SoFi. Goodness gracious. SoFi down another 10%. Wow. Wow, wow, wow. That is incredible. I think Anthony Noto's buying this week. I think he has to. So that means on the 1 week, it's down 15%. Here we go. SoFi down another 10% today. Below 5. If you guys aren't following me on Twitter, @AmidIsInvesting, you can follow along with my market updates every day and everything we're talking about. But we got SoFi. There we go. Below 5. That's why I didn't buy the dip yesterday. People were buying the dip yesterday left and right. And I was just like, this guy is falling. And, I'm not trying to be some psychic or anything, but I was like, it's falling. The market doesn't like what's going on in banks. FRC just got seized. I would not be buying, I publicly yesterday, people were like, are you buying the dip? I'm like, no, I'm not. I'm not buying the dip yesterday. Not yesterday. Wow. Now in penny stock price zone. Oh boy. Wow. I have no SoFi, but now I'm interested. So yeah, it's going to be people like David that have no SoFi, but they're interested at these levels where we might see a little bit more buyers. IEP is down 23%. Well, of course, IEP, of course, is down 23 because of Hindenburg. But that is a lot, man. 23%. Goodness gracious. Now, granted, will it sustain being down that much? Only if the market thinks Hindenburg is right, and that'll take a couple of weeks to play out, just like it did with Square. Square was down, I think, 19% the same day. Wow, man. This is the stuff. One thing you can say is this market is not boring. This is not a boring market. Goodness gracious. This is incredible. This is incredible. Oh my. All right, let's see. Let's see what the mainstream dudes are talking about on CNBC. I wasn't gonna say BS. I actually like CNBC. Everyone hates CNBC. I like CNBC. CNBC is not bad. But let's see kind of what they're saying. We also got the Fed, the federal, the debt ceiling was raised to 1.5 trillion. So we've got at least that as good news, if you want to call that good news. So we're not going to have a government shutdown. But man, this is really a tough spot that we're seeing. Okay, let's take a look at this, and I'm gonna pull up Chegg earnings, and we're gonna take a little bit look at Chegg. Trouble with regional banks won't change the Fed chair's mind on rate hikes. So this is very relevant towards what we're seeing tomorrow. $3 back up the truck on SoFi. Man, if we get $3, that would be crazy. There we go. All right, so let's see what we have to say about the Fed and their rate hikes coming up tomorrow.
All right, for more on the banking crisis and how it's factoring into the Fed's decision this week, let's bring in Jim Bianco, Bianco Research. Jim, great to have you with us. So we've got the banking crisis going on. We've also got this new X date, which has been moved up significantly to the beginning of June. How do you think this factors into the Fed's decision, if at all?
I don't think it does. I think that the Fed is focused on inflation, and they're going to raise rates, and they're going to leave the door open to raising rates again in June. Now, I happen to think that's a mistake at this point, but it doesn't matter what I think. That's the way that they've been viewing it. I'll remind everybody that on February 14th, there was a meeting. This came out with the report on Friday to the Board of Governors of the Fed. Jay Powell was there. They were told that the banks were getting unrealized losses and that they were in trouble. And they pointed out a specific bank that was in trouble, Silicon Valley Bank. 3 weeks later, he went to Congress and said, we're going to raise rates aggressively. 24 hours later, they failed. So he's not going to have anything with the banks change his opinion. It's all about inflation. He sees inflation as a problem. He's going to raise rates this week and leave the door open for more rate hikes.
You don't think that the
And see, that idea that Powell's going to leave the door open for more rate hikes in June, he's definitely not going to say this is the last cut. That is what I think will also, because the market's now baking in, all right, we got this 25. Now they're going to have to bake in another 25 in June, which means there is nothing exciting or positive about that, right? That means theoretically stocks go down tomorrow even more.
X date gives the Fed a little bit of, to the extent that monetary policy should help fiscal policy and vice versa. I mean, that's sort of gone hand in hand for many years. That sort of gives them cover at this point, along with the banking crisis, to say, you know what, we're going to have it. There's going to be a dovish hike, so to speak. So a raise, but then we'll see.
Right. Well, I don't think that the X date is going to really matter. Yes, it is a big surprise that it is early June. A lot of people thought it would be around late July or something like that. So that is a surprise. Jay Powell has made it very clear, and I've agreed with him, that the Fed's position about the debt ceiling is to do nothing. This is 100% political act, and it needs to be solved by Congress without any mitigation by anybody else in terms of trying to fix this.
And, we know, at least in the United States, Congress is not going to do anything. I mean, Congress basically blames the Fed, right? Bernie Sanders, Elizabeth Warren, they're like, hey, you're raising interest rates. That's why people are losing their jobs. And the Fed is like, you guys aren't cutting any spending. So people have more money to spend, right? Because you gave them all this free money. So now we have inflation. If we don't cut inflation, we're going to have a hell of a lot bigger problem than people losing jobs. The devaluation of the US dollar means the US, the US supreme hegemony that exists starts to decrease. Our military starts to seem as they're incapable, right? Like if China starts trading with every other country in the world instead of using dollars, like with Saudi Arabia and Brazil that are now trading in yen for different products and commodities, like that's not good. So we've got to get inflation down. And so there's this constant back and forth between Congress and the Fed. No one actually knows how to solve the problem. I would argue that, yes, raising rates are good, but we've raised them to such a substantial level and the indexes still aren't down, even though individual equities are hurt. Those individual equities have rebounded. We're getting a ton of different layoffs. Now the question is, when does this all culminate into the 2% inflation target that the Fed has? And we don't know when that's going to happen. We have no idea when that's going to happen. And until that doesn't happen, we don't know. The market is an effing joke. I'm going to end it all. Alec, I agree with you. Any clown with basic economic literacy could have seen inflation thundering towards us at 100 miles per hour. Yeah, and this is the thing. Back in 2022, when this was all happening, or 2021, really, Jay Powell didn't see it. The market didn't see it. That's when Biden did another $1,200 stimulus check. No one saw it, even if they should have seen it. And if we had gotten a hold on it in 2021, we would not be in this mess. And 2021 is when valuations went crazy, but also when they started coming down as well, And so now we're in that problem. But one thing that does solve inflation to an extent is AI, because of how deflationary it is. Chegg CEO says, since March, we saw a significant spike in student interest in ChatGPT. We now believe it's having an impact on our new customer growth rate. Fortunately, we continue to see very strong retention rates. They guided on their earnings for decreased revenue growth quarter over quarter for Q2 and for Q3. So Chegg, for those that don't know, it's like a homework service where you look up answers and you find information. ChatGPT is accelerating the deacceleration in legacy business models that rely on user-generated content. What I mean by user-generated content is that people upload their homework to ChatGPT. People answer questions on ChatGPT. Remember Yahoo Answers 10 years ago? I remember I was asking some stupid questions, Yahoo Answers, because I was 10 years old and I was just asking dumb stuff. But I would ask a question, I would get answers. And that's how I consumed information. Now with ChatGPT, you ask the model and the model gives you the answer. And this is incredibly important to understand because we got another headline yesterday. And I don't know if this is good for the Fed or bad for the Fed. And we'll analyze why it's good or bad in a second, which is this headline right here. Reuters reports IBM is planning to pause hiring because they could replace 7,800 jobs with artificial intelligence. Meaning they're not firing 7,800 people, but they're thinking, hey, if we could replace these 7,800 jobs with AI, either we will fire those people eventually or replace them, or we won't hire because these jobs could be done with AI. So we don't need to hire, right? Why is this good for the Fed? Why is this bad for the Fed? This is good for the Fed because let's say 8,000 jobs are gone. That's what the Fed wants. By the way, Morgan Stanley's laying off 3,000 people. That's another report that came out this morning, which, the Fed wants to see the unemployment rate get up to about 4.3, 4.5%. I think right now we're at 3.7, 3.8. And if we can get to 4.4, 4.5, we'll have 1 million jobs down. I don't think we're close to that 1 million jobs being down, Mark. A lot of these are also white collar jobs and, high tech finance and stuff. People that have savings, they'll be able to get another job. But that's good for the Fed, right? If jobs decrease because less money in the economy, theoretically, it's good for the Fed from that perspective. The one perspective it might not be good at is AI replacing all of these jobs. If you take it to the logical extreme, if AI replaces a lot of these jobs, we've got to do more spending, right? Because then you get into these conversations of a UBI, and like that could be massively inflationary. Now that may be a long time away, but it's just interesting to analyze that. The other reason it might be good for the Fed is because it's deflationary. So even though people are losing their jobs, if AI is making companies more productive and they're putting out more output, GDP, I think, is estimated to go up maybe 1% this year in 2023. If you can get that to 4 or 5% in the next 2 years because everything is just so much more hyper productive, then that's good for the stock market, right? It's good for decreasing inflation. But the question remains, is that actually going to happen? Chris had the best take on IBM last night. Yeah, look, Chris had a good take. I mean, my take is that if these jobs are replaceable, then that signals they could be replaced. And at the end of the day, if they could be replaced, then that's something to take seriously, even if they're not being replaced right now. So we will see. If you guys could please like the stream, that would mean the world. Thank you so much for spending your time with me this morning. 318 people here. Please like the stream. Would mean a lot. It just helps within the algorithm. This is an awesome channel. Thank you, Amit. Happy hour time in Lisbon. Awesome. Enjoy your drink, Sue. That's so cool that you guys are here. But comment where you're from, where you are from around the world. I know a lot of people are international. Would love to see where people are from around the world. Banks are failing, and these idiots are hiking rates. Yeah, I mean, look, the Fed is like, well, at the end of the day, these banks failing is not an excuse for why inflation is not coming down, and their mandate is 2%. Now, granted, if the Fed is wrong 2 times in a row, which is what people like Jeremy Siegel said, right? They were wrong in 2021 by not seeing inflation. Now they're wrong in 2023 by seeing inflation too high. Elon Musk obviously thinks they're wrong. Elon says he has more access to financial data running 3 companies, Starlink, SpaceX, Tesla, et cetera, where he sees the prices of raw commodities and goods, where his argument is like the Fed just doesn't have the right data. They're looking at the wrong stuff. Jerome Powell does not care. He does not care. And he's going to keep raising rates. He's going to keep doing it. Employee. So I'm 50% more productive now. Can I work half days? Boss, no, I'm just firing half this. This is insane. We all just have jobs as each other's life coaches. Yep, that's what we're going to do. That's what we are going to do. Wow, we got Thailand, Vegas, Colorado, Houston, NYC, Cleveland-ish, Santa Barbara, Wisconsin, Amalfi Coast, Italy, Malaysia, Indonesia, Hampshire, UK, Bulgaria, Netherlands, Germany. That's so cool. Russia, Virginia, Arizona. That's Liverpool. That's incredible, man. I love it. Russia. Kendall Hughes is from Russia. That's so dope, bro. I just love that. It's so cool, man. There are people in Toronto, Miami, Australia, Long Island. Yours, like, I'm in fucking Long Island. For those that are international, Long Island is like the butt cheek of New York, the butt crack of New York. Toby, you're in Switzerland, Toby? I thought you were in the States. Finland, Sydney, Arizona, Cape Cod, New Hampshire, Belgium, Sweden. I'm in Mexico listening to your stream. I'm just here visiting my family. That's so awesome. That's so awesome. Wow. Thank you guys, man. I appreciate it. That's crazy. It's just crazy to see that many people from all these different places watching the stream. That's so cool. All right. Sofi at 488. We got Enphase at 155. Google at 106. Palantir at 759. All of us that are watching this have a collective interest to make money in the market, and it's just a question of when is it going to be time for those returns to happen. The crazy thing about all of this, SLG also below 23 as well, is that the time to really just like get tons and tons of returns was in the 2010s and in the 2020s, right? That 1 year. And everything has changed because we had a pandemic. We overspent money, too much stimulus. Now the Fed has to decide what they're going to do. The Fed has been very hawkish. As a result of it, stocks have not been able to rally the way they have. But in the midst of all of that have been massive opportunities. Duolingo down to 128. It was at 73 in November. Meta was at 88. Amazon was at 85. Google was at 88 at one point, below $90. So there have been opportunities. Microsoft was at 215 just a couple of months ago. There have been opportunities, and I know some stocks people are getting burned on, but there have been other opportunities that have existed The question is just when is, the world going to be a little bit more friendlier to some of those stocks that happen to be in the growth sector versus the value sector. And when that happens, we're going to see a massive shift. Hi from Italy. Keep the streams coming. Awesome, man. Thank you for being here. Everything I know about Switzerland, I learned from Midsummer, which is 100%. My mom went to Switzerland over the summer, so she got to enjoy that. Yes, you are cool, but you are a bullet train on your speech. I think you're saying I speak too fast. That's fair. I definitely have to. Yeah, I'm from Ireland, but living and working in Switzerland. That's so awesome, bro. I didn't know you were from Ireland. That's crazy. The world loves New York. Iraq, that's cool. We got people from Iraq. Slovenia. I've been to Slovenia before. I've actually been to Slovenia. Slovenia, the greenery is beautiful. I've been there. Slovenia is incredibly beautiful. Slovenia is a great place. Great place. Calgary, Canada. There we go. Reserve Bank of Australia raised rates today. I think Canada's going to raise rates again because they paused a while ago. And so I'd imagine they raise rates as well if they can get inflation under control. And we'll see where it goes from here. S&P down 0.57% at 413. Amazon 103. Snapchat 849. Spotify 136. FRC is suspended. JP Morgan is officially taking it over. I don't know what they paid for it. Either I think they pay like $1.76 or something. I'm not sure exactly what price per share they paid to buy it out. But all of those clients, all of those customers, all of those rich people now are banking with JP Morgan, not FRC. And the other thing about the banking crisis that's interesting is that a lot of those banks, like for example, Silicon Valley Bank was very friendly to startup founders, and they used to take like shares in their company to be able to give them like better financing on loans for their startup. That's gone. So a lot of these startups now are going to have to figure out how to like get loans and how to make money appear, even if they're not businesses aren't profitable, right? If they're not generating revenue. And if you don't have a bank like Silicon Valley Bank that was friendly to founders, none of these other banks are going to be, because they don't have the incentive to do so. That's why SVB was such an important bank in the tech industry. FRC is delisting. Yeah, it's done. Do you think SoFi makes a new all-time low this year below $4? Anything is possible. I don't see below 4. I don't, but if it happens, then it could happen. You didn't read Sweden. I'm sorry, Sweden. Swedish people, I love you. South Korea, love it as well. I was listening to this South Korean girl band yesterday, the song called Cupid. I fell in love with Cupid, something like that. They're like a girl BTS, kind of. It was a really cute song. It was great. It's a great song. South Korea is just like amazing at K-pop. It's phenomenal. Have you been to Malaysia or Australia? No. My uncle lives in Malaysia. Never been to Malaysia or Australia, though. Canada's incompetent government says 3% inflation by the end of the year. They also said the jabs were safe and effective. Well, we'll see. We will see if that happens. SoFi below book value, big guy. Yeah, I mean, look, SoFi was close to book value when it was at 560 or whatever. Now it is below price to book, which is it might just be one of the best opportunities in the market right now, or we might have more pain to go. SoFi at 485, down 11% today. The market does not care about banks. They just do not care at all. All right. That's it for me. Thank you all for being here. I appreciate it. It means a lot. If you don't think Microsoft, Meta, Nvidia, Apple will continue to rally, what makes any of us think SoFi, Palantir, or any of these stocks will rally? Yeah, that's a good point, Josh. And I mean, that's why I only think Palantir rallies if they gain gap profitability and then the street likes it, but then it will sell off. It will absolutely sell off. But we'll see a little bit of a gap profitability is just good for shareholders to see the increased trend, but the stock's probably not going to go anywhere too much. SoFi's in a tough position for the next couple months, especially with increased pressure from Apple. It's going to be a tough position. So we'll analyze it more on SoFi Weekly on Friday, and we'll see what happens. All right, that's it for me. Thank you so much for joining. I appreciate it, everybody. Twitter at Amit is Investing. If you're on Twitter, please follow Twitter at Amit is Investing. And hopefully you will enjoy. If you're not on Twitter, make a Twitter account, and I'll be one of your first follows. And you can check out Twitter and see what it's like. There's a good finance community on Twitter, and it's super awesome to talk about stocks all day on that platform. I'll have a new Palantir video out today. The news from Google is incredibly bullish for Palantir, and that will be the subject of today's video. So be on the lookout for that video. I think the head of Google leaving, the head of AI in Google leaving, and the reasons he left is going to be the reason why Palantir has pursued an AI. I believe will ultimately succeed. So that'll be an interesting video. And then we'll have Finance Junkies again tonight at 10 p.m. Eastern. And we'll be there. Thank you, everybody. Have a great day. Great Tuesday. 5th month of the year. Keep killing it. Get to your goals. I got to get to mine. I got to do a lot of stuff. Got to keep working. I appreciate you all being here. It means a lot. And I will see you guys later tonight. Good night, everybody. Have a good one.